Hello my dear students, we are studying chapter number 4, Recording of Transactions part 2. Today we are going to cover cash book. Cash book is a very common book maintained by all kind of organizations, whether profit making or not. Cash book can be categorized into two parts, single column cash book and double column cash book. When I talk about single column cash book, I mean to say we are recording just those transactions in the book which are related to cash. And we made a ledger of cash, and that is nothing but a single column cash book. And the second part is double column cash book. When I talk about double column cash book, it is such a book which is involving cash transactions and bank transactions as well. Students, you know, we are dealing with the bank on a very frequent basis. But a businessman is dealing most of the times with the bank only. Almost all transactions nowadays are with the banks. So, a businessman is supposed to maintain the record of cash and bank both. So, we have a special book that is known as double column cash book, which would be recording all the receipts of cash, all the payments of cash, all the receipts via bank and all the payments via bank. Because in today's world, all the businesses are dependent on bank. You know students, a businessman issues check to its creditors for the payments. In the same way, it accepts the checks from the debtors. So, he need to maintain a proper record of all those transactions of bank as well with cash. So, this is the solution to the recording of all cash and bank transactions. And one more thing, cash book is the part of subsidiary books. So, I taught you in the last lecture as well, frequently a businessman uses all these things again and again. So, it would be a very hectic and a time consuming thing if it records all the things into journal first, then post it into ledger. So, here we have a solution. If you are having n number of cash transactions and bank transactions, I would advise just to post them directly into the cash book. If you post it into the cash book, that makes less amount of labor. So, let us start with the double column cash book. Here on your screen, you can see there are 8 transactions of cash and bank. I would be recording all these transactions of cash and bank into a double column cash book, which looks like this. On your screen, we have a double column cash book format. The debit side representing all the receipts and the credit side is representing all the payments. That means whenever cash flows in, it should be recorded on the debit side. If the cash is flowing out, it must be recorded on the credit side. And in the same way, if the money is flowing in your bank account, that is to be recorded on the debit side. You could see there are 2 columns of amount, cash and bank. And in the same way, on the credit side, you have 2 columns, cash and bank. If the cash is going out, it would be recorded on the credit side, which is also known as payment side. And if I talk about bank, if the money is going out of your bank, that would be recorded on the credit side as well. There are 2 amount columns on the debit and credit as well. So, all the transactions related to cash and bank are to be recorded in the double column cash book. Now the question arises, what if there is any transaction which is on credit? So the answer is we are not going to record that in the cash book. Then where it is going to be recorded? It is going to be recorded in journal proper and the other books as well. Which are these other books? Those books are purchase book, sales book, purchase return book, sales return book. Right, dear students? Let us start with the question. My dear students, question is to be dealt in such a way that it becomes very, very, very easy. So, the thinking approach would be like this. If the money is flowing in, put it on the receipt side, that is debit. If the money is flowing out, put it on the credit side, that is payment side. It is as simple as that. So, what is the first transaction? We have to think according to the business. Do not think from owner's point of view. Always think from the business point of view, whether the money is flowing in the business or it is going out of the business, right? Because accounting is done from the business point of view. Okay. So, we have the first transaction started business with cash. So, the answer is money is flowing in the business. It is a receipt. It is to be debited, right? When the money flows in, it is to be recorded on the receipt side. Deposited money. In the business, you put money in the business, that means you received money. It is to be recorded like this to capital. You look at the question, you started business with cash 50,000. I am putting it in the column cash by writing to capital. That is it. Now, you have second transaction, paid salary. Paid salary means money is going out. This is your second transaction. By salary. What is the amount for that? The amount is 5,000. I'll put 5,000 on the payment side. Many students make a question if the mode of payment or the receipt is not mentioned. Then what is to be treated? Which account is to be treated? Cash or bank? Then the answer is it is to be taken as cash, right? The way I said paid salary, I didn't mention the mode, cash or check. If nothing is mentioned, please put it into the cash column. Clear? Third is goods sold for cash. You can see the third transaction is goods sold for cash. Now the question is money is flowing in or going out? The answer is if you sell goods, the money is flowing in. So, we say to sales. How much is it? The amount is 10,000. Clear, students? I repeat, for every transaction, what do we observe? We see whether the money is flowing in or going out. If the money is flowing in, put it on the debit side. If the money is flowing out, put it on the credit side. Clear? Now, here comes the trickiest part of cash book. The fourth transaction says deposited cash, 5,000. Where? Into bank. Now, here I need your attention. When I deposit money into bank, that means cash is getting reduced and bank is getting up. So, it is such a transaction where cash and bank both are affected. In the earlier transactions, you saw cash is going out, cash is coming in, but there was no impact on the bank. But now, I am depositing my money into bank. That means cash is reducing, bank is increasing. In a single transaction, there are two accounts which are affected. So, such an entry where cash and bank both are affected are known as contra entries. I repeat, where cash and bank both transactions are affected are known as contra entries. And let's learn how do we record them. I deposited cash into bank. Let's try to make it really very simple. When I deposit money into bank is receiving money. There is an increment in the bank. So, you just record this 5,000 in the receipt column of bank because bank received money. Isn't it simple? You paid money into bank, that means there is an increment in the bank. Isn't it? Yes. Now, who paid it? Cash made the payment, isn't it? Then, I'll record it on the payment side of cash. Simple, isn't it? I show you the transaction again. You deposited rupees 5,000 into bank. I'm talking about the fourth entry. Now, bank received money. So, I put it into the receipt column of bank. And when cash paid it, I recorded it into the payment column of cash. That is it. Now, we have to fill the columns of particulars. How do we fill that? Let's see. When I see I have recorded it on the bank column, I'll make it cash. Now, on the payment side, if I have recorded the amount in the cash column, I'll write by bank. And this is a contra entry, so we must show it is contra entry. We'll write C for that. C stands for contra entry. I guess it is crystal clear to you. And this is the fourth transaction. Let's move to our fifth transaction. What is that? Withdrawn from bank for office use. Now, this is again a case of such an entry where cash and bank both are affected, because you withdrew money from bank for office use. That means bank is going to decrease and cash is going to increase, isn't it? Let's see how does it make an effect. When you are withdrawing money from bank, that means bank is reducing. 1,000 rupees, bank is reduced, and cash received it. Cash means office money. So, cash is increased, so the receipt column of cash is being touched. And when bank is reduced, the payment column of bank is touched. So, it is a case of contra entry when both the accounts, cash and bank, are affected. Right? Now, the particulars. When I have written something on the cash column, I would be writing to bank. And when the payment column of bank is touched, I would be recording by cash. And this is again a contra entry. And the fifth one. This is how we make contra entries. Clear, students? Let's move to the sixth transaction. Check received from Ram. Students, whenever we receive a check from any of our debtor or any person, that check is meant to be deposited into bank. But until it is deposited, that is just a piece of paper to us. That is just a check, not cash, not bank. So, whenever you find a transaction where you receive a check, you people are suggested to check the next entries the way I have done. I wrote that on the 6th, check received from Ram rupees 1,000. Then immediately on the 7th, I am depositing that check into bank. So, what we need to understand in this 6th entry, that we received check on 6th, we deposited in batch, we deposited it into bank on 7th. That means on 6th, it is not cash, it is not bank, it is a piece of paper to us. That is not cash, that is not bank. So, on 6th, we are not going to record it into cash column or bank column because it is nothing to me. It is just a piece of paper until it is deposited. So, now the question is, what do we do? What we are supposed to do with this 6th transaction? So, the answer is, we will record it in the journal proper. Journal proper is a helping hand to cash book. Let's see, how do we do that? Now, to make it in a simple way, I am maintaining journal proper. On 6th, I got a check. Check in hand, account debited, and I received it from Ram. That is it. This is my 6th transaction. Now students ask me, sir, what if you receive check and there is no further information about it? Then the only answer to this query is just put it on the bank column, because you received it and there is no further information. That means it is deposited in the bank immediately. Clear? Okay. So, you received a check, you deposited it in the bank on 7th. For 6th, you made a journal entry. Now, on the 7th, you deposited it into bank. Let's deposit Ram's check into bank. Then, how do we deposit it? We'll say 1000 rupees in the bank. And what did we lose? We lost a check in hand. Is it clear? Thank you. Then, on the 8th, this check got dishonored. See, on 7th, you made a deposit in the bank. You were supposing that this money has increased. But on the 8th, you were notified that this check has returned dishonored. So, simply on 8th, the way I was increasing the bank, I can decrease it as well from the opposite side, that is payment side, that is negative side. And who is the culprit for that? For sure, the person who gave me this check, and the name is Ram. So, I would be writing by Ram 1000. Simply. So, students, this is nothing but a ledger, kind of ledger, and we will balance it the way we were balancing the ledger. Let us see. While balancing, cash should be dealt with cash. I mean to say, the receipt side of cash is to be deducted from the payment side. So, here I can see the total of cash column is 61. So, the dominating total would be recorded on both the sides. But the total of payment side is just 10,000. It has a deficiency of 51,000 and it is my balance carried down for cash book, for cash column. Clear? Now, let's talk about bank column. The dominating total of bank column of receipt and payment side is 6,000, which is on the debit side, and according to our rules, we are going to record it on both the sides, 6,000, 6,000, and the balance is 4,000. 6,000 minus this 2,000. This is how we balance our cash book. And the same balance is to be carried forward to next year. This balance CD becomes balance BD. This is all for cash book. Let us start with purchase book. Let me recall purchase book, sales book. These are such books which are recording transactions which are made on credit. You bought goods on credit, that would be recorded in purchase book. You bought goods for cash, that would be recorded in the cash book. Same happens to sales book. Let us start with the question in which you can see Messrs. Ramakant, invoice number 6780. When the invoice is mentioned, that means the entry is on credit. Let us see how do we record it. Firstly, the name of the party would be mentioned in the particulars column. Then, what are the details? The details are 20 television sets at the rate of 2,000, that makes it 40,000. 5 DVD players at the rate of 1,000, that makes it 5,000, which makes it 45,000. Right? Now we have 10% trade discount. Trade discount is to be subtracted like this, and the amount after trade discount is to be mentioned in the column of cost, because cost means without tax thing. So, the amount which is without tax is to be placed in the column of tax. Clear? Now, the tax is lay with 5% CGST and 5% SGST. Now, these are the simple calculations and would be placed in the respective columns. Plus 5% CGST. When you talk about 5% of 40,500, which makes it 2025, plus 5% SGST, 2025, right? These are placed in the respective columns, and this is how we make purchase book, and the total would be placed in this column by adding 40,500, 2025 and 2025. This is how we wind up for the subsidiary books, which covers cash book, purchase book, sales return book and purchase return book. We have covered purchase book, but there is no difference when it comes to sales book, sales return book and purchase return book. This is all for the chapter number 4, recording of transactions part 2. We will keep on learning this way only in the next sessions for the next chapters. Thank you. Take care.